Alright guys, welcome back to another Formless Digital video. So on today's video, we're talking about divergence, how to look at divergence comparing other charts, and how you can figure out your overall direction by looking at other charts. So let's get into it. So first, the first thing, I was looking at the dollar index and how the dollar index on the monthly time frame had took out, a high. If y'all all know that, as you see here, I got all my lows and highs that hasn't been taken out yet. It's important to do your framework because your framework is going to give you an idea on the range, what the order flow is like, and also what liquidity has been taken out. If y'all know, when the trading smart money concept, we're trying to figure out where the bank's going, and we all know banks go for liquidity. Why? Because above the old highs and lows are what? Stop losses, pending orders, just in case it break out and want to go lower or higher. So that's liquidity. So therefore, we want to base our steps off our highs and lows. So when I saw the monthly time frame on the dollar index that price, made broke a high, I know, okay, hey, this could be a huge retracement on the higher time frame. On the 1 hour time frame. So guess what? If dollar index is getting ready to set up for it to go down, right? Well, what does that mean for anything that's against the dollar index? That means they're going up. So if it's like GU or EU versus, US dollar, that means they're going up. So from looking at the monthly time frame, this is why I always tell y'all, do y'all framework on a monthly, weekly, daily, and hour, because when these setups form, you're able to see it and get these high quality setups. Because the goal is not to kind of catch every up and down move. As a trader, we're just trying to find setups, good high quality setups that's prone to play out. So when I saw that, right, I know, okay, hey, price has to be, be going down. So obviously, this will happen throughout the whole entire week. Obviously, price was fluctuating before it decided to drop, but just kind of break this down to you. Price took out the high of this, right? And then when price took out the high, what do I wait for? I wait for it to finally take out the low of the down candle. So, obviously, price kept going up, after high got taken out right here. So price came down, came back up one more time, and then finally price took out the low of this right here. So your entry would have been right here, where you did at the wick or at the volume. I tell people now to box the volume in the wick of it and go in the 5-minute time frame to try to find a sniper entry. So if you don't know how to catch sniper entries, then you can watch my previous videos on how you can find a setup to catch sniper entries. And also, if you don't know how to trade out setups after highs and lows, we look for order blocks and mitigation setups and imbalances. That's how we find our setups after the highs and lows get taken out. If you know how to do that, then you can watch my previous videos on that too as well. So after I got taken out, right, that means every time price came down, right, that means on EU and GU, price came up. So that means that was an opportunity. So obviously price came up again, took out the high again, and what? It took out the low of this up candle. So just remember, when price is going down, it has to always retrace back to the last up candle that it broke out of. When price is going up, it has to always retrace back to the last down candle that price broke out of. So obviously price came down, right, made a fail high of this, which was an order block setup, and then what happened? We had a price came up and made another fail high, and this is a mitigation setup. When price, fails a previous high, right, and it taps in as a mitigation setup. So that's another entry. So based off this, what happened? After price went through this range, then price decided to drop. So when you're comparing that in real time to EU, and you see EU did the same thing, just the opposite. Did the exact same thing, just the opposite. What happened? It made a fail low, was in the same range before it just took off. Made a fail low, made a higher high. So every time price did that, right, you could have found an entry. Right here, this is the low right here. You have this main low of this, huge move, and then this small end term, you have this low of this. So price failed the main one, but took out this low, Now obviously price didn't give us the order block, but somewhere in the 5-minute time frame, you could have found the entry, on that. Like I said, I'm not going to go details in that because it's not about that. We're looking at how to compare charts and look at divergence. So when price did that, right, what happened? Price went up. Then price took out the low again, right? Taking out what? Making the order block setup. It took out the high of this last down candle. And what I told y'all, when price going up, right, it has to always retrace back to the last down candle that it broke out of. When it's going down, it has to always retrace back to the last up candle, because these are, regardless you see it, these are still structures on small time frames. So on higher time frame, I just like to call them the last candle. And you see what happened? Price taps back into these areas, fluctuated, and then went up. And you gotta think about, just kind of go over a little bit of risk management, not going into too much details of that, because I already did it before on previous videos. But you gotta think about this right here. This is that on the, that hour setup. So this is what I mean by like finding your setup and then go on the 5 minute and trying to find an entry. So obviously what you had a fail low here, so this is an entry right here for price to go up, and then you would put it 10 to 15 pips below this. If this didn't work out, cool, okay, fine. Wait for the low of this to get taken out. Price comes in, and then what happened? Took out this whole entire liquidity, broke above this point, and your entry would have been around this range right here. Or I tell people, if you have the real confidence, just put a entry below the low of this, and this would have tapped in as a perfect entry. But we usually look for our order block. So this was that order block that tapped in right here. So you would try to find a sniper entry around this range right here, between here. So obviously, this could have been an entry. You had it 15 pips below here. So you probably been like, depends on your lot size, and what your tolerance is, most likely, and this is the 5 minutes, so this wouldn't even got tapped in. Your stop loss would have been like somewhere below here, and this wouldn't got tapped in, along with 15 pips. Same thing, around this range. Price came up, and your entry would have been around this range right here. Or you could stay on the hour and stick with the hour. But point is, if y'all ever want to try to catch sniper entries, this is how it look. Find us up on the hour and then go in for a sniper entry on a small time frame. Now you can watch more videos of that, just go watch my previous videos. But let's compare these charts though real quick, side by side now. As you see GU, right? And now you see what the overall setup was, how the overall setup played out. So when we look at GU, we see that, okay, hey, during this same time, okay, that when this came down on this order block, because this was the order block on a weekly time frame, I believe, and price came down, right? What happened? Price came up, tapped back into the last down candle that it broke out of, and then went up. So this made a fail low of this, so that's a divergence. At that same time, when that was doing that was just coming here, making a fail low of this to going higher. So when this went higher, right, and came back down to here, this made a fail low of right here of a divergence. Meanwhile, this made a new low. So guess what? That's a hidden divergence for price to go up. So that right there lets you know that, okay, hey, price has to be going up. Same thing with this. Price made a fail low. It made a fail low here. And not just based off our setups we got. We know, okay, hey, they're in line to go up. It's up to you to be able to take the trade and be confident in the trade. And when I tell people, like, if one trade don't work, take it again. Find another step within that same direction and take it again. Because guess what? How many times did y'all take a trade and it hit y'all stop loss and it goes in your direction? But because you got scared and want to take it again, or maybe you just over leveraged and couldn't take another trade, or you got emotional and just start trading everywhere. Well, if you just stick to your rules and if one don't work, find another entry within this, and I guarantee it's guaranteed to work. You just have to be willing to be confident, in your trade setups, But this is overall how you can look at other trades and compare them to each other, side by side, or go in trading view and put them like literally on the same chart. Trading view is probably a little bit more better. It's just I don't want to get off of this, because if I get off of this right here, I think I would probably add an extra clip by itself on comparing it together on the same graph instead of doing side by side, so you can see a little bit more what I'm talking about. But other than that, if you're finding value in this video, make sure you like, share, subscribe, and comment, and also join the Discord group in the description below, because I will be handing out money for these platforms. People trying to get approved for these platforms. At the end of the day, we all here to learn together. So other than that, I will see y'all in the next video, and peace.